Welcome to Loup TV. I'm Gene along with Andrew for Sunday, January 23rd. That means that we are in front of what is going to be one of the most important earnings week for big tech this week, and wanted to focus in on two tech earnings in particular, that being Tesla on Wednesday and Apple on Thursday. Want to bring in Andrew. You've known Netflix. Remember back in the analyst days, you covered Netflix. This is one of those companies that got taken out. I would think of it as a general being removed from horse last week, down whatever it was, 20+% on Friday. From its peak, Netflix is down 43% from its most recent peak. So it has taken a hit here, and just wanted to get your reaction to Netflix was last week.
Well, I think Netflix is a hint of what's to come, with downward pressure on demand and upward pressure on costs and cost structures that these tech companies are going to need to talk through this week and next during their earnings calls. But I think Netflix, is a hint of what's to come. Investors are clearly skittish. I think that any sign of demand pressure or cost pressure is going to be taken very seriously. And like we saw with Netflix, like we saw with Peloton, investors hate tech right now, and they're going to dump these names if there's any bad signs. So as we look forward to Tesla and Apple and others later this week, I'd love your thoughts, Gene, on Tesla in particular, Apple. They took out Netflix. Are those the next two to go down?
Well, the bar has definitely been raised, in part just given what's going on with the macro. Of course, the NASDAQ being down, let's call it 15% from its peaks. If you look at the rest of big tech, I mentioned where Netflix was. If you look at something like Amazon, down 23% from its peak. And then you kind of jump forward to, I think Tesla's down a similar number, 23%. And then you have Apple and Microsoft kind of sitting down 11, 12, 13% from their peak. So they've done a little bit better than the NASDAQ has recently, which of course anyone who is sticking their head up seems to be an easy target. And I want to maybe try to separate from what I think is going to be a stressful environment for some of these companies because of this heightened scrutiny around tech, because of what's going on the macro. Obviously, interest rates going up puts more pressure on tech because of the DCF models. We've talked a lot about that recently. And I want to maybe just separate a little bit from what the stocks are going to do this week and think more about the fundamentals. And I think you mentioned Tesla in particular, and they're the one that they've kind of given half of the menu so far, and in the sense that we know what the delivery numbers were. They're up 71% year over year in December. That was a slight deceleration from 78% in the September quarter, compares to Ford, which was down 6.8%. Ford is doing the best. I think Ford's in a great place, but I think that gap speaks to what is fundamentally something bigger going on with Tesla. They have a product that is priced right going into this week. Obviously, we don't have to have concern about what the delivery numbers are. I think that the concern is going to come around profitability, as you said, costs going up. And last quarter, the costs were going up, and they kind of defied logic. They exceeded the street's gross margin target. That would be the pressure point going into this quarter. What's the gross margin going to be? And last quarter, I think it was 28. I'm going to check my notes. 28.8%. The street was looking for around 25, so they comfortably beat that. And I think in Tesla's case, if the margin imploded, it would be negative. The stock would be down. But I don't think it's going to implode. I suspect it will probably be flattish, maybe even up fractionally. But if I'm wrong, if it's down, it's not as big of a negative as we'd think, because obviously this is probably anywhere from a 6 month to 2 year phase we're going through around some of these component costs. And the fact that they did so well in September on a cost basis makes me optimistic. And also just the sheer number of units that they put out for the December quarter, there should be some strength and some margins around that. So I actually think that they're going to defy the odds of logic, either have them flat or up slightly. And I think that's probably going to ultimately bode well for Tesla, assuming that the Fed doesn't say something on Wednesday that sends the market into a tailspin.
Just to push one more question on Tesla, the stock is down 15% since they announced those strong delivery numbers. What do you think is causing that downward pressure? And do you think they can really deliver numbers that somehow reverse that tide?
I think the macro is it's down a similar number that the NASDAQ has been. They seem to be going lockstep. And so are the numbers going to be good enough? I'd say it depends on what the Fed's going to do. And I still think that the kind of setting expectations for investors, the Fed setting expectations about what the cadence of these rate increases is going to probably trump whatever's going to happen with the numbers. And I would just maybe draw a line between good fundamentals and stocks going down, which could be the case with Tesla this week, and what we saw last week with Netflix is they guided down significantly for the net sub ads for the March quarter. They guided down by 60%. They typically guide conservatively, but this was more potent. And they talked about kind of the demand equation being the conversion being less than what it was in 2019. And so you're seeing what I think is just a different growth trajectory. And I suspect that Tesla's growth trajectory is going to be intact. I still think that they're largely unchallenged when it comes to EVs. And so I think that the stock could be down because the broader market, but I think the fundamentals, which is most important, I think that they're going to continue to show well, particularly around profitability when they report this week.
Okay, so macro headwinds heading into tech earnings. You mentioned the pressure point on Tesla. What's the pressure point on Apple when they report this Thursday?
Of course, the supply chain. So Apple has had a benefit to a lesser extent, but a benefit from what's happened in the past year and a half, 2 years. And some of it is more acutely related to remote work, but there's also the benefit, I think, and that's more of a near-term benefit. There's also the long-term benefit of what is many describe as accelerating digital transformation, and that just remote work and remote learn, play from anywhere. There's just they are the block and tackle, the fundamentals for that long-term trend. So if you think about the kind of direct headwind that somebody like Netflix or Zoom would get, DocuSign coming out of the last 2 years, that headwind, Apple does have a headwind as we kind of slowly reverse back to the mean, but it's not going to be as acute. The key, that's not the pressure point though. The pressure point is probably going to come in the form of how big of an impact is the supply chain. This is something that we've been tracking since really before the holiday, since kind of mid-November, and we looked
decades.
Yeah,
tracking it for decades.
Yeah, we have. Yep, we've had a long history of doing this, and in this case, we looked at 7 new Apple products across 6 countries, and just looked at the average lead times. And as a reminder, what Lucas said on the last call is that there was going to be a greater than a $6 billion headwind, and I suspect that headwind is probably going to be closer to 8 to 10 billion for the December quarter ultimately, and kind of quickly frame in where we get there. Again, somewhere between art and science here, but the lead times around the middle of November for these 7 products were around 20 days on average in the middle of November. And then that kind of drifted down to around 16 days. Normally at the end of the December quarter, this is the average lead time for their new products. Usually would see that in the low single days by the end of the December quarter. So we're at 16. That's part of that $6 billion plus. But something that stuck out is since then in January, those lead times have been inching up again. Now, not dramatically, but going from around 16 to 18 days. But we still see Macs and iPads, you basically can't get them. We're talking 40 days plus out. There's just no movement there. But something that stuck out to me, which was a lot of that, most of that is driven by strong demand, which I continue to believe strong demand. But I think there's still like these spasms within the supply chain. For example, if you look at lead times for Apple, the latest generation Apple Series 7 watch. In Mexico, for example, it had been kind of trending a couple days, and then it jumped to 2 to 3 weeks recently. And now in the U.S., that extended from 1 day to, I think it's like 3 or 4 days now, 3 days now. So you're seeing the latest iPhone was same day. Now we're seeing 3 days out. And so I think that is going to be the A topic, because the numbers that come out, the first numbers that come out, aren't going to tell the story because of the whole supply chain impact. And I think that there is near-term risk to the stock because of that. I think that investors are going to take some time to debate and digest what they're going to see. And when I talk about near term, usually I talk about 3 months being near term. In this case, I think it could be hours or days near term. But I think once investors kind of look back and kind of look at the fact that the majority, I think, of these delays are for continued strong demand, I think that Apple's going to show well. Ultimately, I think that their December quarter will show well for them.
So for what it's worth, a quick data point from the Murphy family household, we recently procured a pair of AirPods, the third gen, the latest AirPods, and an iPhone 13. No noticeable delays. They both came in about 2 or 3 days in the mail. And the AirPods, we had engraving on it. So
yeah, we're seeing the same thing. The AirPod Gen 3 has been same day availability since the beginning. So quite a reversal from AirPods originally came out. But what you just said is representative of what we've been largely seeing. But again, the real significance there isn't those products. The big ones are right. Macs and iPads.
Macs and iPads. Okay, we'll tune in on Thursday for Apple earnings. We'll tune in on Wednesday for Tesla earnings. Lots of fun to come this week. I'll play us out here for Gene Munster. I'm Andrew. Gene, any last words?
Buckle up. We got the Fed and big tech coming the same week. We're going to have to be dodging some punches here. Stay focused on the fundamentals.
All right. Bye for now.